investing in stocks long-term, as well as developing the skill sets that we need to build wealth. Any questions? Okay, then I will share the interest form in the chat, and I'll turn that back over to you, Sharon. You're muted if I can't hear you, rather, Sharon.
Thank you so much for that.
You're welcome.
Okay. All right. So we've already mentioned that the next segment of the meeting is going to be educational. So one of the things that we usually do is we share our educational experience. That experience could be reading an article in the Better Investing magazine. It could be interesting new ways or more understandable ways of studying our stock. And then I believe Anne has queued up a video that is very important. Now, I'm not sure how many current members are here, but this is what I would hope is that we are going to share our educational experiences. I can start or I can wait. Who wants to go first?
Sharon, this is Ann McNeil. I am actually on a bus boarding a flight, so I can go ahead and go first. And I just ask everybody to just bear with me because I do have a lot of noise in the background. But as the founder of the National Association of Black Women in Construction, I became a member of Better Investing after somebody stole some money from me, but he didn't have a gun. I gave it to him, and I did not know how to analyze stocks and how to invest. And he knew I did not know. And that was the beginning of my investment journey. And as I began to learn what is a stock, how to analyze the stocks, and how to invest, something as simple as $20 a month from Better Investing almost 30 years ago, I realized that we're taught how to make money, but we're not taught how to make the money make money. And this club was formed as a result of my experience in investing to help our NABWIC members and anybody who's interested in learning how to analyze stocks and how to invest. And I don't have a problem telling my personal testimony, the fact that my construction company would not exist if I had not been an investor and investing in my retirement and learning from this organization how to invest. So that's my story. And I want to just encourage everybody to just make sure you complete the documents we've given you if you're interested in being a member of this club. Thank you for allowing me to share, and I'll go back on this. Thanks.
Aaron, I can jump right in here and pick up where Ann left off. My name is Doretha Dennis. I am currently serving as the secretary. So this morning, I'd like to share with you an article I took from the May 2025 Better Investing magazine. At the very back of the magazine, they share information about a club from River Place Investment Club. They're from Bradenton, Florida. I lived in Florida for some time, so that kind of piqued my interest. And they use AI to give them advice about picking their stock. They've been together since 2022, and they have some advice that they offer other club members to show how they do a good job at picking their stock. They've have a gain of 58% since they started. So they have done well in picking their stocks since they started their club. They do have about $37,000 in their bank account, and they have 17 stocks that they have chosen. Their favorite investment is NVIDIA, and if you know AI and all of the technology that's at the forefront, that is a pretty good stock to choose. That's exactly what they focus on, NVIDIA, and so that has done well for them. A terrific price growth and great future projections is what they say about this particular stock. They do have one that they say they would rather forget, or if they had a do-over, it would be In Phase Energy. Apparently, they have not done very well with them. Hopefully, they have gotten rid of that stock. They have sold it. They do have a set of guidelines that they stick to, and one of them is that a stock must be held by the 8 most profitable exchange traded funds, NASDAQ, QQQ, XLK, all of those platforms they use to help guide them. One additional piece of information is that they all live in the same town. They are close knit because they all kind of live in the same community. And the idea that they use AI to pick their stocks was quite interesting to me. So I have 3 stocks that I watch as part of the club, not only as the portfolio manager. I watch over all of the stocks, but I have 3 that I am responsible for. So I quickly used Gemini and put in some information in Gemini. Gemini is one of the AI platforms, and I told it I wanted to give me a stock analysis for that one of my stocks. Cactus is one that I've been watching closely because they're not doing very well. So I put in information about Cactus. They gave me a great summary from Yahoo Finance. However, Gemini was not able to give me an updated summary from Value Line. I was very surprised at that. So that let me know that, okay, you have some information from one source, but BI suggests that we use Value Line. So that means I now would have to go over to Value Line and check out what they're saying about this particular stock, Cactus. And I did send out, I want to join this club on the next time they meet. So I sent an email to the lady who wrote the article to get some information about their day and time that they meet. I couldn't find it on the BI site. I couldn't find their contact information on the site. And I couldn't find it in the magazine. So I sent some information to BI about when they meet, and that perhaps they may not be meeting online, and I may not be able to do that. I may have to visit another club, but I'm looking forward to using AI in our club and to see how well the platforms work and how AI works and helping us to choose high quality stocks, those that grow at a great level. That's all I have to share. Thank you for allowing me to share.
Thank you. I'm going to follow up with you because I am doing AI also. Okay. Doretha and I went to a workshop last week before last, and one of the things that they talked about was artificial intelligence. Now, Better Investing and Better Investors 2 years ago used to poo-poo AI and say, yeah, we're not going to have anything to do with it. But now we all know we can't ignore it. A couple of things that I learned from that, I am going to share an article, I'll do it relatively quickly, is that you can't give it general questions. Asking specifics about specific stock is helpful, okay? But even then, you're going to have to go back behind it and use our resources like Morningstar, Value Line, and even Yahoo Finance to make sure that they're telling you the whole truth. Now, the other thing I wanted to follow up with Doretha on is that there's an article in the March Better Investing magazine. It starts on page 37, and it says stocks that ride along with the AI revolution. And the whole reason why we say that is that we know, like large companies. Doretha mentioned NVIDIA. NVIDIA is a very large company, and unfortunately, I missed the opportunity when I first started this investment club. I presented it, but I didn't have, anyway, I didn't buy. Well, now look. So anyway, the point is, NVIDIA is a very large corporation, and they mentioned the 7 magnificent AI connected corporations. NVIDIA is one, Amazon, Meta or Facebook, Alphabet, Microsoft, Apple, and the infamous Tesla. The reason why they mention those is because they all significantly use artificial intelligence. But not only that, what's more important is that there are smaller companies that have contracts with them. And that is what they're saying. They're saying you may not be able to afford NVIDIA or the Magnificent Seven now, but there are feeder companies, and that's what you have to start looking toward. Those companies that have contracts with them. They use 2 pages of smaller companies that feed into them. I'm not going to go through all of them, but we are all familiar with Planetar, Uber Technologies, Palo Alto Networks, Eaton, and Vertiv, Advanced Micro Devices, and several others. Then they started saying, is that there are areas that you start looking at to start honing in on finding the industries. That is healthcare, because healthcare is more and more starting to use AI to decrease cost and increase productivity. Transportation, logistics, retail, e-trade, finance and banking. I'm going to say this. I invested in JP Morgan probably 3-4 years ago because I understood that they were starting to get big into AI and to those types of ways of moving money because it was taking too long. And I'm telling you, it has been a big investment. So finance and banking, very good. Real estate, agriculture, I'm telling you, agriculture, you don't think of agriculture as needing AI, but absolutely, absolutely. At this point, because you're losing so much agricultural land to development, they have to use agricultural land to the utmost. They have to produce 7 times what they used to on the same acre of land of what they used to do 30 years ago. Manufacturing. And so the last thing that I'm going to say is that that AI is a helper. It is a tool. It is not something that we are supposed to use to do the most of our investing. It's like anything else. We have to do the work. And it is a tool to assist us to dig down deep into these corporations. And that concludes my portion of the reading. Who's up next?
Sure, I'll go ahead and share something quickly. So I have, for the last maybe 2 months, I want to say April,
I'm sorry.
March, and
I
April.
was trying to come off mute, Nicole. Can we play the
okay.
video for your presentation? I put it in the chat, but I guess we didn't see it.
No, I don't see it in the chat. Am I missing something?
Thank you.
Okay.
Video.
All right. You're going to put it in the chat?
No, we're going to play the video. He was asking
okay.
who was on next. We had on the agenda, wanted to play the video for the new members and wanted to make sure that the new members, if you got in now and you watched the video, could just put video in the chat, the word video, if you've already watched this video. I just want to see who's responsive in the home already. Thank you. I'm going to go back on mute. And that's it. Thank you.
Okay. All right. So I'll share.
Thanks.
Michelle will pull it up. Okay, great. So I'll share quickly. Over the last couple of months, I've actually been attending the annual meeting of some of the stocks that I currently hold, which is not normal. Normally, I'm a very passive investor. And so, you kind of purchase and then you let it do its thing. But this has been very insightful and engaging. I mean, I've learned that the investors themselves, like one of my aha moments was really the value of the investors in how they engage and how much weight, how little or, how much weight their input and insight carries in some of these meetings. I mean, we've seen in some of these companies actual leadership change because of the investors' engagement. And so I definitely want to encourage anyone who currently is investing to take advantage of attending those annual meetings, even if it's just to kind of see how it works. I know the ones that I've attended are very quick. They're probably 15 minutes tops, so make sure you're there on time, if not early. You'll get to hear directly from the CEOs, the CFOs, like those board of directors. You'll get the updates and insights right there in the moment, and you can even ask questions. There's also a little bit of a networking opportunity, especially if you have a really good company that you've been following for a while. You'll get to sort of meet some of those stakeholders. I actually got an invitation to some kind of briefing after my attendance to the annual meeting. And normally you probably wouldn't get those types of additional engagement if you hadn't been at the annual meeting. You get to learn a little bit more about the intricacies of the organization, how it's really governed, and you can evaluate, based on the information you see that they put on the websites, opposed to how they actually interact with one another. And that also gives you really good insight. So think about attending an annual meeting for one of your investments and share your insights, share your voice. You've invested in these companies and they really want to hear from you. So that is my story. Okay. So I still do not see in the chat the video that Anne would like to share.
Oh, I can pull it up on the screen to play it.
Okay, great. All right, please share. Thank you.
Okay.
Hi, and welcome to the new betterinvesting.org. My name is Eric, and I'm going to guide you through our member website. The best place to get started is our Getting Started tabs in each of our top navigation areas. Getting started with your membership, getting started with the Learning Center, getting started finding great stocks, getting started with online tools, getting started with investment clubs, and getting started with our community. First, though, I want to show you our member homepage. We've moved the green box that was located on the upper right-hand corner of the old site to be a gray box now for our stock selection tools. However, none of our tools are changing, and all of the functionality of this is remaining the same. You can enter in a ticker ID to launch your SSG, or you can access your studies. If you're not currently using tools, you can access a free trial right here. Then we can continue our tour with our most active stock list. You can see the top 10 companies that our members are currently investing in. Or if you're looking for great stock ideas, you can find our first cut stock reports, attend an upcoming event, get information about your chapter, download the latest Better Investing magazine or view past issues, get insightful information. And then I want to showcase our footer. We have mirrored everything that is on our top navigation down on our footer. So if you get lost, this is an easy place to come and reference. We've also moved your My Account and My Downloads right here to the footer. As well, you can see we have some help options with our Help Center and our FAQs. We have an online chat or email box, or you can always provide feedback on the website using our feedback tool. Let me show you My Account. In My Account, you can change your website password, you can manage your magazine passwords, all of your email and subscription information, change your credit card information, or access, again, your downloads. But let's continue the tour here. If you're new to us, I highly recommend starting in the Getting Started with Your membership. That's going to talk about our investment classes, our tools, the Better Investing magazine, First Cut stock reports, give you investment club information. And it is also where you will access our member programs and special discounts. So make sure to come and look here. Then we move over to the Learning Center, and I want to highlight the Better Investing magazine. This is where you can find information about our mobile device app. You can get our reports and other resources to help you study stocks. And then this is where you can access our magazine archives, where you can sort by title, you can sort by date, or you can search, or you can view your magazine right here. We also have our new video learning library. The video learning library hosts over 100 archive videos. You can find all of your favorites, such as the Intro to the SSG, Adding Judgment, Buy the Best, special programs, as well as see regularly scheduled programs, such as our Stock Up and Ticker Talk, and then browse by topics. The other area you can go is See All Videos, and that is going to launch into a filter where you can filter by title, date, or series. Continuing through, you could get your events, find out about the upcoming stock ups or ticker talks right in this area. Now let's go to Find Great Stocks. This is a new area of our website, and it's really your easy to navigate, one place to go area on this site to find great stock ideas. You can use the online tools with our custom stock screening. This walks you through that. Helps you with stock ideas such as our top 100, the Better Investing most active stocks, My Stock Prospector, stock screens, and then our First Cut stock reports. On the First Cut stock reports, you're going to be able to come through. You can search, you can filter by a company name, ticker, sector, size, how many studies there, the latest study. So I'm going to go through the latest study, which is paychecks, and then we'll view our latest study. You can come to the company homepage, see the company research page, or launch in SSG right from this page. Speaking about our stock selection guide, we do have our online tool section, which is going to be an in-depth look on how these tools can help you find and analyze great stocks. In our investment club area, if you're part of a club, welcome. We do have the investment club accounting area where you can learn about accounting and club operations. Or if you're interested in visiting a club, you can say visit a club near you. Find our Visit a Club program and our model stock investment clubs. That leads us into our community where you can learn about our chapters. You can visit your chapter, which will take you over to the chapter listing page. There we are. You can learn about how to volunteer or see our corporate partners. Well, I want to thank you all for coming. and I invite you to learn in our Learning Center or watch some of our other orientation videos. Welcome to the new betterinvesting.org. Have a great day.
Okay, Nicole, just want to mention to everybody, please, we're going to put the Better Investing 90-day free membership in the chat again. We also emailed it to all of you when you registered. If you click that link, sign up for the 90-day free membership. Everything you just saw in the video, you have access to as a member. Thank you.
Okay, great. I'll definitely put that link in the chat for everyone to see and take advantage of. Okay, I think I'm up now, or is there another person before me, Sharon?
No, it is, you're up now.
Okay, great. All right,
But
everyone.
just make sure we let people in. Y'all, please let people in. Thank you.
Okay. All right, let me know if you're able to see my slide. Is it visible?
Yes.
Okay, great. All right, because I can't really see anything behind it. Well, thank you everyone for joining our meeting today. I am going to be talking about a company that is recommended for our portfolio. It's been on our watch list for a while, and Doretha mentioned some of the stocks that she's watching as well. This is one that I'm going to talk about today. The organization, let me start back. What happened? So the company is Axos Financial. Oh, I could move this forward. A little bit about an overview of the company, just for those who are watching and may want to take a look at it. Its ticker is AX. It's on the NASDAQ. Actually headquartered in Las Vegas, Nevada, and it was founded in 2000. Axios is a financial holding and diversified financial services company. It has a little over 23 billion, almost $24 billion in assets right now, and it provides a range of banking services, even though it's not technically a physical or traditional bank. Some of those services range anywhere from fintech services to other online services that helps to distribute their financial resources. It's in two distribution channels. One is it's loans, which is about $20 billion in total deposits as of June 30th of 2024. And it has about $35 billion in assets under securities and diversified investment products through broker relationships. Has a little over 1,800 employees, and its officers and directors currently own about 5% of the company. Some of the key differentiators of Axios Financial in comparison to its peers is the technology that is used to become more efficient and innovative in providing those banking or fintech related services. Just as a financial snapshot, as of April of this past April 29th, the stock price was $62.84. As of today, the stock price, I believe, is $72 and some change. So you can see a rapid growth in just a short amount of time, even with all of the fluctuations in the market. The company does have a market capitalization of about $3.7 billion. And right now, its PE is a little bit lower than what I would personally care for. It's about 9.5. Earnings per share is about $6.62. And its net income from 2023 is 240 billion, which actually is, I want to say the 2024 income ended up being close to 3 $322 billion. So definitely some room for growth. Again, it's a tech-driven company. So tech overlaid by financial services, and has a very strong brand for innovation and efficiency in providing those services. All right. So third quarter, I attended their annual meeting, which I believe was April the 30th, 29th or 30th. And this is what I learned from the meeting. Axios has a very solid foundation for the financial foundations, right? Right now, with over $1.3 billion in annual revenues and a net income about $240 million, it's running efficiently. It's very profitable. It is using its net income to drive technology, not only with this company, but with other organizations that it's either looking to acquire or to partner with. It's still considered to be undervalued in comparisons to its peers. So again, there's a lot of opportunity for growth here. It's very lean, and if you know anything about lean, and it speaks to their efficiency and the utilization of their structures and their processes and how they operate as an organization to get to this net income of a little over 240 billion. It's also growing both vertically in multiple different areas. And so you'll see that throughout the presentation where they're looking to grow more vertically. All right, so what we've done is we've utilized the SSG tool in Better Investing to give us a little bit more insight about where this company really is. Our mantra at Better Investing is that we look for long-term growth stocks, and that growth is generally distributed by what we call an up, straight, and parallel line when you're looking at its earnings per share or its historical sales. Here in this diagram, you can see this first green line here is going to give you some insights as to whether or not there's a growth, an up, straight, and parallel growth strategy for the company. As you can see, based on 2015 data all the way up into 2024, there's been consistent growth in its sales, starting at 230 million all the way up to $1.07 billion at the end of 2023. The software estimates that its growth potential is about 16.5% every year. But what we've done is we've looked at other resources, Morningstar, Value Line, and Yahoo Finance, all of those big name brands that kind of gives what the investors think about this organization. And based on that, I've gone a little bit more conservative, right? I don't really know, based on the analyst estimate at the time, what their determining factor was, but we've looked at in earnings a very conservative historical sales at about 12.5%. In terms of earnings per share, we've also, and this is the analyst estimate of 9.5% is the expected growth over the next 2 years for this company. So based on that, we put that into our model, and I'll share a little bit more about the bottom part of it. These are also very key and very good indicators to help us evaluate the health, the growth, the strategy of the company. We all know and understand what debt to capital is, whether or not you owe more than you actually have. You can see here the trend line for this one is downward, which means you have a lot of debt, but you're paying it off. And that's a really good sign for a company. You can also see in this very lower half that, and I can't see it because my screen's in the way, it says return on its average assets. So it was a little bit high, and then it became a little stagnant, and now it's going up. That's a key indicator as to where that additional income is going to and what the company is particularly looking to move into. And that could probably be some of those vertical areas that they're talking about in their annual meeting. Again, the return on the equity is fairly decent. Average return is about 16.4%. All right. So the next slide, their business. They have some strengths and they have some risk, as all investments do. Very strong in retail banking. They have very high yield savings rate and checking and mortgage products, even though there is no physical locations. They're very strong actually in real estate. So they do a lot of investing for multifamilies, mixed-use commercial projects. And, oh, I'm sorry, that was my timer. I'm going too slow. All right. And then again, one of those verticals is their growth into the brokerage and wealth management. And then lastly, their fintech. Their fintech makes them lean, makes them efficient, and allows them to grow more quickly. Some of the risk, they're not a physical bank. They could be a little bit heavy exposed into real estate. And right now, their wealth and brokerage services aren't up to snuff with some of the big boys. Things to consider in terms of investing in this organization, right? They're very strong. Their high yield products are really good. They definitely can scale digitally without a lot of overhead because they don't have brick and mortar and lots of employees. There's a lot of automation. There's a lot of AI integrated in this, and they are diversified. Other risks, interest rates are fluctuating, and then any changes that may be to particularly fintech as well as regulatory banking systems. So keep those in mind. All right, so back to the SSG. What we've done is, based on our analysis of the stock and understanding the PE ratios and the earnings per share, we utilize in this particular example, I actually use the most recent high PE ratio, which is 8.9. Still a little low. PE ratio is an indicator of the profit of that organization over its expenses. And you really want the profit to be higher over the expenses. So we typically look at ratios between 20 or 22 as being really good markers. So the estimated high earnings per share was about $11.71, which gave us a forecasted high purchase price over the next 5 years at $104. Again, I mentioned the current price now is, I believe, is about 72. We did the same analysis using the average PE low based on the very lowest earnings per share. I think in the previous slide, we saw that it was about $6.62. Here, we've estimated the low earnings to be about $7.44. So the share price could go, based on this projection, as low as $43. Given those scenarios, we estimate a buy range between anywhere of $43 and $58. So at the time of this, I believe the market price was about $62. And let me see what it came out with. We still estimate it as a buy, right? Anytime it gets over $88 and up, there's a marker for selling this company. In this current analysis, we can see that our upside downside ratio, which is the D, which is another really good indicator. Upside downside ratio is just basically that for every $1 that you lose in this investment, you have the potential to gain $3. So the higher the upside, the better your return would be, right? So we'll gain $3 for every $1 that we lose. And then we have a targeted appreciation, again, over the next 5 years of a little over 78.7%. All right. In terms of growth, right now, the 5 years is estimated to be about 15% over the next 5 years, with an 18% growth in earnings per share. We're definitely looking to double. They are looking to double their loan portfolio over the next 5 years, and they're very competitive in terms of their rates. And it's mainly because they don't, right now, they're just dominating this fintech space. There's some other profitability metrics. The return on the equity is about 16% here, and we're looking at less than 5% of their total assets are non-performing, which is really good. Right now, they're competitively positioned to be pioneers in digital banking, right? They're one of the first or among the first to not offer physical branches, and they have proprietary data and proprietary technology to help them deploy and provide those fintech-related services very efficiently. They got over 500,000 customers, which is a little bit low in comparisons to their peers. And we can see, based on their rate of equity being 16.5%, their peers is still only averaging 12%. So there's a lot of growth here. Their PE ratio is a little bit higher, but I think that once they solidify the vertical services, their brokerage and wealth management services, I think their PE ratio will increase as well as their equity. A little bit more about their valuation. You can see the analysts saying it's a buy. They're excited to see it outperform their current quarterly reports. Their target range right now is between $70, $80. It's at $72 today. And it's definitely going to continue to move and grow in the digital space. Thank you so much for your time, and I'd be happy to answer any questions. Did I lose anybody?
No,
Okay.
I thought that was an excellent presentation.
Okay.
And as far as AI, they were obviously one of the companies that were mentioned in the article that I read. Okay, I just thought that was excellent. You did a great job.
Thanks.
Okay.
Sharon, if I may, there is a visitor who has a question for us. Her name is Rhonda
Thank you.
Adams, I believe it is. And she says, what trainings are offered for new feeder funds for the New York, the new stock offerings for local syndication, public versus private? And I see Ann did give her an answer that's not our focus. We really focus on the education. You can definitely personally lean into the answer for that and share that data with us as you become a member of this investment club. So thank you, Rhonda, so much for the question, and I hope we gave you an answer. Go ahead, Sharon, you may continue.
So I think, is it Darren Franklin also said, are there certain criteria to look for in the feeder companies that are affordable? Two things. One is, once you join, there is in your educational section of the site, there is a list of criteria that you look at for your businesses that you analyze. That's one of the things. Now, Nicole didn't mention it as she went through her presentation, but as you become familiar, that Nicole went through all of these criteria, check them off. She just didn't tell you she did it. So the criteria are in the BI site. The other thing, and you're going to go by those criteria. The other thing I want to make sure that I mention is that affordable does not equate to cheap. A company that may be $10, you may not. It may be good, it may be early, it may be a lot of things, but that does not equate to affordable. You have to look at the criteria to make sure it meets what we look at as a high long-term investing stock. Okay. I see you, Doretha. Were you looking at another question?
Yes, I was just checking out another response from one of our visitors. Felicia is saying that she needs to leave. She's taking an exam and that she enjoyed our meeting today. Very informative. Okay, just another reminder, if you're interested in joining the club, the link is in the chat. Also, the 90-day free trial for better investment, that link also is in the chat. Thank you, Sharon.
Okay, we are getting close to our end time. We try to meet as close to an hour, if not less. It is now, well, my time at 6:53. Okay, I'm on Central Standard. And so if there are no questions, if there are no more questions or any more questions in the chat, we can begin to close down.
Yeah, I think Rhonda had asked about other fintech related financial companies such as Novia. And I just responded that I know we have several companies that we have evaluated. What we do try to do with our investments is to have a balanced portfolio.
Mhm.
And so we try not to overly invest in similar companies, but we try and find the best fit that meets that better investing criteria of long-term growth. We're looking at stocks that have an average or minimum annual growth. I believe it's between 12-15%. And so if the company that presents itself to align with our diversification, to align with the better investing principles, and we feel it's a good fit, those are typically the companies that we will select, even if, like Sharon mentioned, they're less expensive or, you know, maybe a quicker, quicker get rich opportunity there. So I don't know if we particularly looked at Novia. Has anybody had any experience with that?
I think what's important, you just mentioned BI principles.
Mhm.
And so, again, all those are on the site and we follow those very carefully. So we may not have looked at Novia. And once this person or Rhonda becomes more familiar or has done some research, she can bring it to us and then we can look at it.
Mhm.
But we have not looked at it as part of our portfolio and as one of the stock that we've done reviews to determine if it's a buy or sell hold.
Okay. Okay.
Also, we have one additional comment in the chat. It comes from Mia Ferguson, and we may have answered it. She said she submitted her interest form,
Yes.
but she didn't get a confirmation. So we need to set that up so that an individual will know whether or not will receive a confirmation once they submit their interest form. So Nicole, I'm quite sure. Can you give us an answer quickly for Mia about
Yes.
whether or not?
I did
Yes.
receive her form. Yes.
Excellent.
Yeah.
Excellent.
And I will set up some type of automatic response to ensure that, participants know that we received it. And we'll give you next steps as well. One of those next steps would really be to take advantage of the Better Investing membership. It is normally, I believe it's $80 a year. But there is a free 3-month trial for you to sort of get in there, play around with some of those tools. It's a great resource for training and education, and it's really helpful. Put your own portfolio in there and see where you're measuring up. Maybe you would want to know what those ratios are or, growth potential in the company. So take advantage of that opportunity and resource.
And make sure that you say that Nicole put that in the chat earlier.
Mhm.
So that information and the link is in the chat, the 90-day free trial of Better Investing. Okay.
Yep. I'll share it again.
Okay, are there any other questions or anything else that we need to provide?
Yes, this is Carolyn, and I want to share the article I read in May on the May issue, and it speaks. I know everyone spoke about stocks, but this is, as is education, is the long-term care insurance policies. And as we know that the baby boomers now we're going golden age and looking for failing health, so we'll need somewhere, think about the home care or a facility. So in this article, it actually spoke about a key decision to make when selecting long-term care insurance. It spoke about the daily benefits. That's a dollar amount of the daily or the monthly benefits, what will cover in the long term if you needed 100%. It spoke about the elimination period. That is the length of the time that you must be in the nursing home or receiving home care before the insurance start paying benefits. And it was saying that typically that you may select a 30, 60, 90, or 180 days. The longer the waiting period, the lower the premium. It mentioned the inflation protection because as the rate as the benefit increases annually, so you want to get that inflation rider to so when they increase, because it said that they increase from 1% to 5% every year, so that way you can keep up with the inflation. It spoke about the other decision you have to make is the length of the coverage, and you will have like a 1 year coverage, or you can have, they said typically you try to have like a 3 years coverage. That's the most common sweet spot that most people get. Qualify to receive benefits. That's one of the key decision you have to make also. The type of long-term care to be reimbursed. They said that the coverage apply for homes, adult care center, nursing homes, assisted living facilities, that maximize the benefit selection. And the premium reduction. They say that most companies offer a reduction of the premium if you're in good health and if you're married, or if both you and your spouse applied and eligible for the coverage. It went on and it spoke about, that their current challenge in the long term, in the challenges that it have in the long-term care insurance, because it said in the National Association of Insurance Commission, it said that there was 100 insured in 2024. Today is only 10. So the advice is to make sure and call those that are close in your neighborhood. Try to reach out to those insurance company to get more information. So I just wanted to share that. It have more, but for time's sake, I will just. It's on for those who have the article for May. It's on page 10 and 11, so you can continue reading to get more information, because this is part of life. We know that we are living longer, but sometimes things happen. So we want to make sure that we take care of our loved ones. And that's it for me. Thank you for making me share.
Okay, Sharon, are you still there? I believe if there are no other comments or questions, this will conclude the meeting. And again, please feel free. We have your contact information. So those who did register will also get the formal invitation for becoming a member of the organization. The form will highlight all of the requirements that are necessary, and we'll send that email out to you following this meeting if you did not get a chance to complete the form.
Please check the chat. Check the chat.
Yep, we're checking and monitoring the chat. I think we've answered everything that's there. You're making a motion to dismiss. I second that motion. And are there any objections? Okay, great.
Nope.
Well, this meeting